the $3,200 raise hiding in your employee benefits. You're leaving thousands of dollars on the table every year, and you don't even know it. Your employer offers benefits worth $3,000 to $8,000 annually that most employees never use. HSA contributions, FSA accounts, dependent care benefits, commuter perks, tuition reimbursement, and more. I'm about to show you the 5 employee benefits that are basically free money and exactly how to claim every dollar you're entitled to this year. The benefits nobody uses. Most people think of employee benefits as health insurance and 401k matching, but your benefits package likely includes 8 to 12 additional perks that can put thousands of dollars back in your pocket through tax savings, reimbursements, and employer contributions. Here's the problem. HR departments don't aggressively promote these benefits because they cost the company money. They're available, but buried in 40-page benefits packets that nobody reads. The result? You're paying full taxes on money you could be shielding. You're paying out of pocket for expenses your employer would reimburse. You're missing employer contributions that require zero effort to claim. Let me show you the benefits that are costing you the most money. Benefit 1. Health Savings Account, HSA, up to $1,950 in tax savings. If you have a high-deductible health plan, you're eligible for an HSA. This is the most tax-advantaged account in existence, even better than a 401k. How it works: you contribute pre-tax dollars up to $4,150 for individuals or $8,300 for families in 2026. Some employers contribute to your HSA, free money, often $500 to $1,500 annually. The money grows tax-free if you invest it. You withdraw it tax-free for qualified medical expenses forever, no expiration. The math: if you're in the 22% federal tax bracket plus 5% state tax, every $1,000 you contribute saves you $270 in taxes. Max out your HSA at $4,150, and you save $1,120 in federal and state taxes. Plus, you get your employer's contribution. Many people don't contribute at all or only contribute the employer match. You're leaving over $1,000 on the table if you're not maxing this out. Bonus strategy: pay medical expenses out of pocket now, save receipts, and let your HSA grow invested for 20 years. Then withdraw it tax-free in retirement using decades-old receipts. It's a stealth retirement account. Benefit 2, Flexible Spending Account, FSA, up to $650 in tax savings. FSAs let you set aside pre-tax dollars for medical or dependent care expenses. There are 2 types. Healthcare FSA. Contribute up to $3,200 in 2026 for medical expenses not covered by insurance, copays, prescriptions, dental, vision, glasses, contacts, even sunscreen. It's use it or lose it by year-end in most plans, though some allow a $640 rollover or 2.5-month grace period. If you're in the 27% tax bracket, federal plus state, a $3,200 contribution saves you $864 in taxes. Dependent Care FSA. Contribute up to $5,000 for child care expenses, daycare, after-school programs, summer camps. This is especially valuable if you're paying for childcare anyway. That $5,000 contribution saves you $1,350 in taxes at a 27% rate. Most parents leave this unclaimed because they don't realize it exists or don't understand how it works. Benefit 3, Commuter benefits, up to $810 in tax savings. If your employer offers commuter benefits, you can set aside up to $315 per month pre-tax for parking and $315 per month for transit passes in 2024. That's $3,780 annually, $7,560 if you use both, that you'd otherwise pay taxes on. The savings: If you spend $200 per month on parking, that's $2,400 annually. Run it through Commuter benefits, and you save $648 in taxes at a 27% rate. Many people pay for parking and transit out of pocket with after-tax dollars, never realizing their employer offers pre-tax savings. Even if you drive and pay for gas, some plans let you use Commuter benefits for parking at park and ride lots or work parking fees. Benefit 4. Tuition reimbursement, up to $5,250 tax-free. Employers can reimburse up to $5,250 annually for education expenses, college courses, certifications, training programs, and it's completely tax-free. This isn't a loan. It's free money for improving your skills. Requirements vary by employer. Some require the coursework to be job-related. Some require you to stay with the company for a certain period after completing the course. Some cover any degree or certification. I've seen people get MBAs, IT certifications, project management credentials, and even undergraduate degrees fully covered by their employer, and they never paid a dime or owed taxes on it. Check your benefits portal. If tuition reimbursement is listed, use it. That's $5,250 per year you're not paying for education that advances your career. Benefit 5. Life insurance and disability coverage. Most employers offer basic life insurance, typically 1 times your annual salary, for free. But they also offer the option to buy additional coverage at group rates, which are far cheaper than individual policies. Term life insurance through your employer costs about 1/3 to 1/2 of what you'd pay buying it yourself. No medical exam required for coverage up to certain amounts, often $250,000 to $500,000. Payroll deducted, so you never forget to pay. Disability insurance, short-term and long-term disability coverage, protects your income if you're unable to work due to illness or injury. Employers often provide basic coverage free and let you buy additional coverage at group rates. The cost is typically 50% to 70% less than buying it individually. If you're the primary earner in your household, disability insurance is arguably more important than life insurance. A 35-year-old has a higher chance of being disabled for 90-plus days than dying before retirement. Yet most people skip this entirely. The real cost of ignoring these benefits. Let's add up what the average person is losing by not using these benefits. HSA max contribution tax savings, $1,120. Dependent Care FSA tax savings, $1,350. Commuter benefits tax savings, $648. Tuition reimbursement, $5,250. Value of education received free. Life insurance savings versus individual policy, $400 per year. Total annual value, $8,768. You're giving up nearly $9,000 per year by not using benefits you're already entitled to. Over 10 years, that's $87,680. And I haven't even mentioned smaller perks like employee discounts, wellness program incentives, gym reimbursements, or mental health benefits. How to find out what you're missing? Log into your company's benefits portal today. It's usually accessible through your HR system or payroll provider like ADP, Workday, or Bamboo HR. Download your Summary Plan Description, SPD, for all benefits. This document lists everything available to you. Read it. I know it's boring. Do it anyway. Highlight benefits you're not currently using. Schedule time during open enrollment to elect these benefits for next year. Most benefits can only be added or changed during open enrollment unless you have a qualifying life event. If you find a benefit that's available now, like tuition reimbursement, apply immediately. Don't wait for next year. My client's $4,800 discovery. I worked with a client named Rachel who was paying $400 per month for daycare, $4,800 annually. I asked if her employer offered a dependent care FSA. She had no idea. We checked her benefits portal. It was there. She could set aside $5,000 pre-tax for dependent care. We enrolled her during open enrollment. The following year, she saved $1,296 in federal and state taxes on that $4,800 in daycare expenses she was paying anyway. She also discovered her employer offered $1,000 annually in wellness incentives for completing a health assessment and gym visits. She claimed that too. Total found money: $2,296 for about 2 hours of work, researching benefits and filling out forms. Open enrollment mistakes that cost you. Open enrollment happens once per year, and most people spend 5 minutes on it. That's a $3,000 mistake. Here's what not to do. Mistake 1. Auto-renewing without reviewing. Your life changes. Your benefits should too. Got married? Had a baby? Bought a house? Your benefit needs are different. Mistake 2. Not comparing health plans carefully. The cheapest premium isn't always the cheapest plan. If you have regular medical expenses, a higher premium plan with lower deductibles and copays might save you money. Mistake 3. Ignoring the fine print on FSAs. If you over-contribute to an FSA and don't use it all, you lose it. If you under-contribute, you pay more taxes. Estimate carefully. Mistake 4. Not updating beneficiaries. Life insurance and 401k beneficiaries should be current. If you got divorced and never updated, your ex-spouse gets the money. Update every major life event. Mistake 5. Skipping optional benefits you need. Disability insurance, life insurance, legal services. These optional benefits are valuable and cheap through your employer. What to do this week? Log into your benefits portal. Find the summary plan description or benefits guide. Make a list of every benefit you're not currently using: HSA, FSA, commuter benefits, tuition reimbursement, wellness programs, employee discounts. Calculate the tax savings or value of each benefit you're missing. Mark your calendar for the next open enrollment period. Set a reminder to enroll in these benefits. If any benefits are available outside open enrollment, like tuition reimbursement, apply immediately. Ask HR if you're unsure about anything. That's literally their job. Stop leaving free money on the table. If you found this valuable, hit that like button, subscribe, and ring the notification bell. I drop new finance strategies every week that most creators won't tell you about. Also, visit Own Your Finance blog for more in-depth financial tips and hacks, whether it's employee benefits, tax strategies, money management, and more. Don't forget to download my free guide, Finally Break Free from Living Paycheck to Paycheck, the simple 10-step budget that actually works, and start building real wealth today. Don't miss it. Thanks for watching and have a great day.